Hi, I'm Scott Lucas with Lucas Financial Services and Wisdom Tax Group, and today is my Wisdom Wednesday message. Today, I thought I'd talk a little bit about the financial markets because people are starting to get a little nervous and scared based on the decline that we've had. And the thing to keep in mind is markets are self-correcting. These types of things happen over and over and over again, and the important thing is to not panic. So, looking back here at the S&P 500 index over the last 10 years. You can see a lot of volatility over time, right? And you can see this was actually the last time there was a fourth quarter of 2018 when Trump had implemented tariffs, and there was a lot of concern about that. As it turned out, they worked out very well. Many of them are still in place today. Here's the COVID crisis. Here's 2022. 2022 was considered one of the worst financial years in the markets ever, as far as across the board. Not against the stock market, only it was the seventh worst for the stock market. But it was horrible for all sectors. So horrible year that year. And so anyway, and we can see, and here's what we're experiencing right now, right? So rather small in the grand picture of things. So when markets go down, you've got three choices. You can hold your course, you can sell, or you can buy, right? There's only three options that you have. So I'm going to go back to a time period where some of the headlines were a little similar as to what they are today. And that's that fourth quarter of 2018 when we first started implementing tariffs. So go back to the next screen here, and you'll see that in that fourth quarter of 2018, it was a pretty solid year all the way up until that fourth quarter. But during that time period, there's a 19.53% drop in the S&P 500 index during that quarter. We're not down nearly that much at this point, but anyway, that was a significant decline. So at that time, you can either hold your course, sell, or buy, right? So I'm going to give you some numbers on those three different scenarios. So on the first one, we're going to say that you just buy and hold, right? So assuming that you had $100,000 invested in the S&P 500 index, if you and I'm just taking it over a short time period. This would be June of 2018 through the end of 2019, so about a year and a half. So you could have survived that decline, and your 100,000 would be worth 118,000, which is an 18.18% gain. All right. So that's the hold scenario. You can't screw up if you're patient. Next scenario. Sell and rebuy. So here we bought $100,000 investment in June of 2018. We sold half of it. I didn't say sell the whole thing. I said sell half of it, sell $50,000, put it in cash. 6 months later, put it back in the market. Okay. So the 100,000 grew to 114,000 at 14.91. So still pretty good. Here's the problem. When you sell when things are down, for that to work out, keep in mind we're already down a fair amount. The market has to go down further from where you sold, and then here's where everybody screws up. I mean everybody. You have to buy back in before it gets to where you sold, right? And generally emotions, if you sold on emotion, you're not going to feel good until it's back here, right? So almost always a disaster, and I highly discourage it. And if there was an easy way to kind of time those markets, everybody would be doing it, but there's not. Anyway, over that time period, because 2019 was such a strong year, still got 14.9, but you didn't equal just holding your course. And let's go to the third scenario. This is the best one, all right? Think of things as opportunistic. When people are fearful, all right, that's where the opportunity is. When everybody's talking about, I know last year people were talking about, hey, I heard about NVIDIA, should I buy? I'm like going, man, it's really, kind of overpriced. I got that with Tesla. I'm like, man, it's really overpriced right now. And so what happens is they've both taken a pretty significant dip, but people, their emotions tell them to buy, when it's high and sell when it's low, and everybody knows it's buy low and sell high, right? So you do the exact opposite when you follow your emotion. But anyway, if we look at this, so you started with 100,000, and then when the dip happened, you bought in an additional 50,000. So you bought low on December 15th. Is just the date that I picked, December 15th of 2018. You added an extra $50,000, and look at what happened, 20.21. So you bought during the low, and your outcome was by far the best. So hold, sell, buy. Best option. Thank you for listening. Have a great day.